Hello guys, and welcome to the White Rabbit Trading Channel. Before we begin, please take a moment to read the disclaimer below. Remember, I'm not a financial advisor and everything here is for educational purposes only. Alright, let's dive in. In 5 days, we will witness a monthly close, and with that event, we will identify several important levels. Although it is still 5 days away, I want to highlight these levels ahead of time because they are already significant for potential trading decisions and future market behavior. Yearly open turning into monthly support/resistance. The yearly open, which lies around 93.400K, will not only continue to serve as the yearly open but will also become a monthly level. Depending on how the monthly candle closes, this could evolve into a monthly support/resistance level or even an order block zone. It may not perfectly fit the textbook definition of an order block because we typically look for a more pronounced impulse out of a range to classify it as such, but it is, nonetheless, an important volume-based level that we should keep in mind. If price closes in a manner that supports this level's importance, we will treat it as a major reference point going forward. If price decisively breaks beneath it on higher time frames and does not reclaim it, that would be a bearish development. The 5 EMA will likely shift slightly higher over the coming days. This moving average can be extremely relevant when looking for retests of higher time frame levels, confluence with other key areas, such as the monthly level, yearly open, potential confirmations of bullish or bearish momentum, depending on whether price remains above or falls below it on monthly, weekly, and daily closes. In an ideal bullish scenario, this 5 EMA might align very closely with the yearly open and/or the newly formed monthly level, further solidifying the significance of that cluster as a support area. Conversely, if price fails there, it could signal an impending deeper retracement. A lot can happen within these next 5 days. Price might make a sudden pump higher or could just as easily dump lower. We need to be prepared for either scenario. Once the monthly close is in place, we will also revisit the monthly statistics to identify potential pullback levels or continuation levels. If price chooses an upward direction, we will look for signs of strength and possible dips to buy, using our identified key levels. If price moves downward, we will watch how it reacts to the yearly open, volume levels, or other significant supports to decide whether a bounce or further decline is likely. Moving on to the weekly chart, we want to pinpoint what the candle closes tell us. Candle closes on a weekly time frame can provide clearer insights into momentum shifts than lower time frames. The weekly momentum is poised to cross bullishly if Bitcoin closes above 102K. Should that happen, we then want to observe if any subsequent pullback leads to a reclamation of that level. It is vital that Bitcoin does not close below the current weekly low or the weekly open, because while that may not immediately be strongly bearish as long as the broader range lows remain intact, it would certainly allow room for a deeper retrace or a longer sideways consolidation. Such a scenario typically delays any new trending move in the market, as participants wait for clarity on whether support levels can hold. At this point, we cannot predict every swing. The primary goal is to note which levels hold after the weekly close and monthly close. Based on that information, if levels hold, we formulate a plan to ride the momentum in that direction. If levels fail, we switch our focus to the next lower or higher level, anticipating continuation or reversal. This wait-and-see approach ensures we adapt to actual market data rather than forcing a preconceived bias. On the daily chart, Bitcoin is currently trading near the upper portion of its range, specifically above the value area high of that range. Here are the main points to consider. As long as Bitcoin holds above the value area high, it supports the chance for further upward continuation. If Bitcoin loses that level, we then look lower for possible support. Those support levels might include a potential SFP or deviation setup, the point of control, the yearly open, the value area low, if price were to break deeper into the range. From a bullish standpoint, we want to see price either retest and hold this upper range boundary value area high. Or perform a liquidity sweep below it and then quickly reclaim that level, confirming that sellers are being absorbed and buyers are stepping in. Timing for lows and highs. Observing the historical range timing, the previous low was formed somewhat earlier than the lows that came before it. If we extrapolate the longest potential move to around 14 days, we have a window from today until Monday or Tuesday for a possible significant low to develop, which might align with forming the weekly low. Of course, no pattern is perfect, and there is always a chance it could deviate from statistical norms. Still, it provides a framework for planning. If the market is bullish, a typical sequence is, we open the weekly candle, price dips to form a weekly low, and then moves up. Sometimes that dip is shallow, but it can also be a larger pullback that offers a stronger buying opportunity if there is a notable sign of strength. Potential bearish scenario in terms of timing. If price chops around for an extended period, reaching the time window when we usually see highs formed, it could simply print a lower high or fail to reclaim a significant resistance level. In that case, it might roll over and head lower. This situation would open the possibility of deeper downside. Notably, this time window for the next meaningful high may converge with the new monthly open, which underscores how the interplay of multiple timeframes can shape market structure. Local price action and liquidity. Within the smaller intraday ranges, Bitcoin has been forming higher highs and lower highs in a compressed manner, suggesting that liquidity is building on both sides above and below. Since the moves are getting smaller and smaller, it is only a matter of time before the market decisively takes out one side's liquidity and potentially triggers an actionable trade. Trading inside the range. There are numerous potential support levels, so one must watch carefully for reaction at each level. If price sweeps a local low or high and re-enters the range, that can trigger a long or short setup. If price moves beyond that level and fails to reclaim it, we look to the next level below or above. This process leads to the level-to-level style of trading. Example, suppose you enter along at a support level. If it bounces and hits the next resistance successfully, you might take partial profit or move your stop-loss higher to protect gains. If price then breaks that resistance, you might keep a runner portion of your position, expecting further continuation. Sometimes, price action is clean within a small range, providing multiple short-term trades. Other times, it trends more choppy, and waiting for higher timeframe levels can offer clearer setups. Whether you choose to trade each local bounce or prefer higher timeframe confluence is a matter of personal strategy and risk tolerance. Now let's take a closer look at momentum across various timeframes, along with the daily statistics for potential gains or losses. Weekly momentum close requirement. A weekly close above 102K is needed for the momentum to confidently cross up. A 2-day close above 103K is required for momentum to remain bullish on that time frame. The daily chart suggests a close above 105K would confirm bullish momentum. This is something to keep an eye on in the next few days, as daily closes can shift the short to mid-term outlook. On the 12-hour chart, a close above 104.600K is necessary to maintain an upward momentum bias. On the 4-hour and the 1-hour charts, a close above 106K is needed to preserve bullish momentum. These momentum thresholds serve as technical benchmarks. If price rallies into these levels but fails to close above them, it often implies a potential correction or at least a pause in bullish movement. If price surpasses these levels, it strengthens the bullish narrative, provided other indicators or price action confirmations align. Daily range statistics. We also have some daily average statistics regarding the typical percentage move to the upside or downside. An average 1.51% gain from the current opening prices places Bitcoin near 106.200K, which corresponds to a local resistance region. If price heads there without showing any sign of weakness, it could close around that level, reinforcing bullish momentum. Alternatively, if price tests that level and exhibits signs of reversal, e.g., a change in local market structure, bearish divergences, or a failure to break above it, it could be a shorting opportunity for traders who are looking for a rejection signal. On the downside, an average 1.51% loss points toward the 103K area. If price slides to 103K and bounces with conviction, that might be a local support scenario for a long entry. However, if price lingers around there and closes near that level, the next day's average loss statistic, which might be around 2.2%, could push Bitcoin down to around 101K. These examples illustrate how daily statistics can help map out potential intraday support and resistance zones. Of course, price can close anywhere in between, slightly above, or below these estimates, but by being aware of these typical moves, traders can prepare for various scenarios. Putting it all together, here is the overall action plan and perspective. Monitor the new weekly open. Observe whether price initially moves down to form the weekly low or moves up to test resistance. Keep the historical timing in mind, the window through Monday or Tuesday for forming a more significant low, and a corresponding window for the high around 9 to 12 days into the move. Watch key liquidity levels. Liquidity sits both below current price levels and above recent highs. If price sweeps below value area high but quickly reclaims it, that could trigger a long setup, targeting higher range boundaries. If price fails to hold that reclaim, look to lower support levels, POC, yearly open, value area low. Focus on momentum closes. If higher timeframe momentum remains bullish, it provides a tailwind for long trades. If midterm or short-term momentum begins to turn down, consider whether that aligns with structural breaks, creating more confidence in a short or expecting a deeper pullback. Level-to-level trading. Continue to approach the market in a level-to-level manner, taking trades at clearly defined support or resistance, and waiting for a strong reaction before entering. If a certain level fails, wait for the next significant area. If a level holds, that might be a cue for a trade. Protective stops are essential, as swift volatility can occur if stops above/below these liquidity levels are triggered en masse. Potential longer holds into the end of the week. If a bullish setup occurs around the weekly open and the timing for the monthly close aligns, one could hold a long position into mid or late week, especially if each day's price action respects the structure. Conversely, if a more bearish scenario unfolds, price fails to hold key areas and starts closing below them, you might pivot to short setups or stand aside until clarity emerges. While the analysis provides an outline of possible scenarios, the focus should be on reactions around key levels and how price closes on daily, weekly, and soon monthly candles. Predicting every move in advance is impossible, so the best practice is to watch the levels and confirm whether they hold or break. This approach ensures a balanced perspective, focusing on confluence, timing, momentum, and statistics, all while respecting that no analysis can be correct 100% of the time. Flexibility and risk management remain paramount. That's it for today's update. If you found this video helpful, don't forget to like, subscribe, and share. I'll keep you updated as the market develops. Until then, trade safe, and I'll see you in the next one.